Today I have a guest who will be going to learning about the basics of the trading. And just to let you know about that, she's also the winner of the contest, a car. Yes, you heard it right. So I'm not gonna promise you things over here. I'm not gonna be pretend to be an expert here. I'm gonna be talking about basic in a basic language about the trading and about the mindset and how to start a trading in the basic level.
Hello guys, my name is Olivia. Thank you Manish for inviting me to this conversation. I'm incredibly happy to have this opportunity.
You're welcome. I'm also glad that you are joined over here. And so first of all, if you're just starting out with the mindset and how to struggle with this, so this video is for you to knowing about how to get started with the trading.
Honestly, Manish, I won't waste a minute, and to be honest, I have a very simple but I think the most important one. What should a beginner understand at the very beginning of even trying to trade?
That's a very wonderful question. So before we get ahead, let's go to a comfortable place to talk about this.
Sure, let's go.
Olivia, it's for you.
Thank you, Manish.
So the most important thing a beginner needs to be understand is this: the market doesn't owe you anything. It sounds simple, but this is like a where most people break. People come in with expectations to make money fast, to prove something to themselves, to recover losses, to change their life in a month, and the market immediately like starts testing them. So not their knowledge, their mindset. When you come in with the expectation, you stop seeing the reality and start seeing only what you want to see.
So it isn't about the strategies or tools.
No, strategies come actually later. First, a person has to understand that trading is not a race, not an attempt to predict the future. It is a decision-making process under uncertainty. And if you're not ready for the fact that some of your decisions will be wrong, then you're not ready for trading at all.
Oh, that sounds harsh.
Yeah, that's the truth. So it's honest trading doesn't punish, it reflects if you rush. So it shows you the consequences of rush. If you're afraid and if amplifies that fear. So if you don't understand why you are entering the trade, you should start getting nervous with every nice move. That's why the first thing a beginner needs in not charts or buttons, but a clear understanding of why they are here in the first place.
So what was your strategies in the beginning? How did you plan?
Oh, of course not that this was not my strategy. And in the beginning, actually, I did everything the opposite way. I thought the main thing was catching thing and the moment. And if the candle like started moving, I had to jump immediately, but I just rushed. I overreacted and I responded to a very move. And that's when I lost the most because I wasn't managing the process. The process was managing me.
Okay, what was your turning point?
That's a question. I realized like the market isn't going anywhere. So opportunities that came and don't run out. So what runs out are like nerves and accounts of people who try to take everything at once. The moment I stopped chasing and every move and I started waiting for clear, understandable and setups. So calmness appeared and together with it, results.
So Manish, trading is more about waiting than acting.
Absolutely. So most people think that trading means constant action, but in reality, good trading is the ability not to enter, the ability to pass, and the ability to tell yourself. So this is not my movement, and that's much harder than processing a button.
Okay, so I think that trading is more about the person than the market.
Oh, exactly. Now you're getting it. So the chart is a mirror and it shows how you are in the moment. So if there's chaos inside and your traders will be chaotic, if there's outside and you start seeing structure. That's why in this video, we will talk not only about how to trade, but about how to think in order to even have a chance to consistency.
Then let's continue. If trading starts with a mindset, the next logical question is, how do you avoid blowing everything at the very beginning? So Manish, I thought that trading is all about numbers, screens, and constant stress.
Not really. Like trading is actually very distorted in how most people imagine. It's often reduced to screens, numbers, and instant decisions. So as if like there was a reaction-based game, and but if we were being honest and mature about it, trading is about working with probabilities and with your own mindset. So you are not. So I'm so sorry to break you. Like you're not really competing with the market, and you're not trying to be outsmart. You're learning to understand where you have an edge and where you don't, and most importantly, learning to stay out of places where there is no edge at all.
So I think it's being about active all times, right?
Not really at all. Like, so this is probably one of the most important points. So most people think a trader is someone who is constantly like doing something, opening trades or closing them, watching every single move. No, in practice, it is opposite. The more experienced a trader, the less they act. So most of the time, they observe, analyze and wait, because the market doesn't pay for activity, it pays for the precision and for choosing the right moment.
So what is the foundation of trading then?
Usually when we go on deeper into this, the foundation fact, let's understanding the risk and accepting uncertainty. You never know how a specific trade will end, and never even the most perfect setup can go against you. And trading begins with accepting that fact. The moment a person stops accepting guarantees and starts thinking in probabilities, they stop making stupid and emotional entries.
So it's all about the strategies, you mean?
When we talk about the strategy, like strategy matters, but Olivia, it's not the main thing. You can give two people the exact same strategy, the same rules, and their results will be completely different, because one will break the rules and rush and increase risk when they shouldn't, and the other will calmly follow the system. Trading is first and the foremost discipline. The ability to do the same thing correctly, and even when you really want to do something else.
Can be the market actually understood?
If I will say in a one word, yes.
Okay.
But it's can't like fully understand it. But you can learn to read this behavior. The market is a reflection of the actions of millions of people, their fears, expectations, greed, and doubts. Price doesn't move because someone clicked a button, but because the balance between buyers and sellers and shifts. So, and a trader learn to see these movements not through emotions, but through like the structure, price, reactions, and context.
So the trading is really about the mindset, you mean?
Absolutely. So it's work on yourself. You're constantly facing situations where you either need to wait, accept a small loss, or not to enter at all. And every time, the market tests not your knowledge, but your state. So whether you're calm or not, whether you are following your plan or trying to revenge trade, that's exactly why trading changes people. It very quickly shows you where you rush, where you get greedy, and where you're afraid.
I think this is something you can actually learn even if you are not from the finance background, I feel.
Oh, that's obviously like knowing about the finance is something a plus, but you can still do it. Your past education or your experience doesn't decide this. What matters is your willingness to learn and to be honest with yourself. Like trading doesn't like illusions, so it doesn't require you to be genius, but it requires is consistency. So if a person is ready to work on their mindset, discipline and understanding of the process instead of like chasing quick money, and over time they started seeing the market but much more clearly, and that's when the trading stops being stressful and turns into calm systematic work.
So, Manish, what about the deposit? It's really about money or just about control?
It's actually more about control. So money is just in the form it takes. Look, most people come into trading and thinking the main thing is guessing direction. Like if I enter correctly or everything will be fine. But the market doesn't work like that at all. You can guess the direction 10 times in a row and still below your account. And you can be wrong more often and still make money. So the whole difference is a risk. Risk management sounds boring and I know it. So nobody wants to hear about it, but it's the only thing that actually keeps you in the game. Because the market doesn't break you with one trade, it breaks you with a series of bad decisions. But each time you risk just a bit more than you can actually really handle.
So it's all not about the strategies, you say?
Strategy is basically like a secondary. Honestly, because even a good strategy can be destroyed if risk is managed poorly. So here's a simple example. Like you enter a trade and think, all right, if anything happens, I will just hold it, and at the moment you're already broken risk management. Even if you haven't placed to a stop yet because you have already allowed yourself to lose more than you planned. Risk management isn't about percentage. It's the deal you make it with yourselves and about how much you are willing to lose on one trade and still remain calm. Not angry, not tense, just normal because the moment you lose more than you are comfortable with, you start trying to get revenge on the market. You're no longer thinking, so where's my good entry, and you are thinking, how do I get it back? And that's the most dangerous state you can be.
So, how do you know where the limit is? Like, actually, where to stop? You know that
It's
better.
Yeah, it's very simple. After you make a loss and urge, immediately open the trade another one. It's various two risks. So about your plan and stops doubting yourself. The risk was too big and proper risk feels sick fearing. So close the trade and loss and think and okay next. So no drama. So most people risk management is a limitation. In reality, it's a freedom. So because when you already know the maximum you can lose and you accepted it, the market stops being scary. You're not afraid to press the button and you don't clinch to a trade. So when price moves against you, you just need to wait and hold it back.
Okay, Manish. So, I think that what really keeps the account safe?
Always don't enter in the bad entries because the bad risk people you will going to look like ugly. Your account will be blown up. So you need to wait and understand the trade and then make a account for that. So last long, and when the risk is built properly, a strange feeling appears. So you stop caring how specific trade ends, not in careless way, but in a calm way. So you know what if that one doesn't work, there will be another, and that mindset is that maturity in trading looks like. At some point, you catch yourself checking your balance and less, and because you understood it's no longer held together by emotions, but by a system. And a system, look, Olivia, are always stronger than a single trader. So remember that once you make a trade, think about being patient and then make a deal.
Thank you, Manish.
No problem.
So, Manish, does the fear ever go with the time?
No, that's probably the first thing worth understanding. Fear doesn't disappear, it just becomes familiar. In the beginning, you are afraid of everything. Pressing the button, placing a stop, or closing a trade, not entering and entering in the wrong place. Later, fear is still there, but it changes its form. It no longer shouts, it sits quietly next to you and keep you making suggestions. And fear in trading is almost like a tied up expectation. A person expects the market to owe them something. That if you understood everything correctly, price has to move the way they think it should. And the stronger an expectation and the stronger the fear, because mentally you've already spent a result that doesn't exist yet. So the hardest part is the waiting after entry when you already in a trade, everything seems to be according to a plan, but the market goes silent. And in the process of the overthinking, they watch everything, look for confidence and confirmation, start doubting themselves. Not because the market is bad, just because there's acceptation inside and they're still waiting for a guarantee.
So, if there are no expectations, can you even trade at all?
Technically, you can. That's exactly when real trading becomes. When you enter not with the thought, has to work with the understanding. If it works, great. If it doesn't, I already know what I will do. In that, most expectation disappears. So all that's left in process. Fear shows up when you're trying to center and what can't be controlled. You can't control the market. You can only control your entry, your risk, and your exist. Everything else is not your responsibility. But for most people, that's hard to accept. They want to know in advance. They want certainty, and the market doesn't give that. So at that point, a person either stays fighting fear or learns to live with it. Fighting it is a pointless, and it will still be there, and you accept fear, normal side uncertainty. So it stop controlling your action, and the most dangerous, I would say, are made in the emotions. In acceptation, you're just sitting there and just a bit more, it has to move now. So in that moment, I will be waiting, and you no longer following plan, and you will just following hope. And hope in trading always more expensive than it seems. So over time, something simple happens and you stop expecting anything specific from the market. You just respond. You don't rush. You just don't rush to close. You don't hold just because it hurts or let it go. You know, if not this is trade and there will be another, and that knowledge doesn't come from theory. It comes from the experience. And then fear is still there, but it no longer interferes. It just background noise you make and you decision calmly. That's the moment when trading stops speaking constant tensions and becomes a normal, understandable job. So one where you're not fighting the market and not waiting for the promises from it, you just do your part and allow everything else to happen without you.
Thank you, Manish. Sorry, but I have a lot of questions for you.
Oh, no problem. Take your time. I'm here to answer all of your questions.
You know, I have heard about Japanese candlesticks, but everyone talks about them and no one really explains them well.
Look, that's because people start explaining them in a complicated way too early. In reality, it's much simpler. Japanese candlesticks aren't some like secret market language or magic. They're just a way to see what happened to price over a certain period of time. No assumptions, no predictions, just facts. So one candle is a small story, and there was a starting point and ending point, and in between prices move somewhere. That's it. So there's nothing more than that. But people start looking for signals, names, pattern, and they lose the myth. Meaning, a candle doesn't tell like what will happen next. It will show you what has already happened. The biggest mistake is think that candles predict something. They don't. They record behavior. They show who are stronger at that moment, buyers or sellers, and whatever. That whether the trend was confident or weak. When you look at the candle, what matters is it the color, not its shape. It's the context where it appeared after a move or upward pause at a level or its own space. Because the candles where it's mean thing nothing. It's only starts matter next to like candles. So very beginner at the set of the Indian candles, red is bad, green is good, but that's not how the market works. It works in a sequence and the candles are just the footprints of those sequence. They show whether the moves was easy or forced, whether the price have been pushed quickly or resistance for a longer time. These are the moments when a candle looks big and confident. But if you look closer, you will see that by the end of was almost completely brought back or sold back. And that's more important than the seize itself because it tells you what about the reactions about the market disagreeing with the move. And on the market like hand on this is a calm sequence and they more often honest, so they say no one thing about now the market is thinking. And the moment is like that, it's better not to force anything, just wait. Candles are very good at showing what the line market is ready and when it's not. So the most valuable things in the Japanese candlesticks give you is a feeling, a living market. You stop seeing the just a price line, you can't see process, you understand. Where the things are been easy, where they are very difficult. So the price was pushed and when it moved on its own. And when you stop like looking for something candles and start reading them like a story, everything becomes calmer. Now you know like from the hints from them, simpler it becomes. Market has already shown you, and then you either just do according to your plan or you don't act at all. And that's more than enough.
Why do beginners almost always lose?
Oh, because they don't come back where they should. They don't come to the market. They just come to expectation, and almost no one starts with the broad like thought about this thing. I'm here to learn the process. They just come with this that they have to work for me, and that immediately creates pressure. The person like basically hasn't done anything yet and but already owes the market a result. So beginners don't lose because their market is complicated. They just lose because they try to move faster than they are ready for. They don't understand how the market moves yet, but they already want to make money. They haven't learned how to lose calmly and they just already dreaming about it like profit. And that the gap between expectation and reality where they starts breaking them. Almost all beginners see trading as a set of like correct actions, like find an entry and find a strategy and everything will work out. But the market isn't an instructions manual. There's a do it right like button here, and there are constant choices under uncertainty and emotionally. No one is ready for in the beginning, and another reason is rushing. So beginners feels like they are like late, like others are already making money and they are not. So and because of that, they start entering not because they should, but because I need to do something. They confuse movement with the progress, and the market doesn't pay for that. So very often, beginners don't accept losses as normal. Every loss like feels like a mistake or a personal failure. And instead of simply taking it and moving on, they start building and hoping and revenge started trading. So not because like no one explained them, not to losers are the part of the job, not a system failures. There's no more thing about like rarely talk about this. One advice like beginners watch every time money work more closely and never watch themselves. So they should track the balance. the percentage, the results, and they should notice that they are in very like making decisions. And the market punishes like that state very quickly. Rushing, anger, fear, the urge to get the back. Over time, a simple realization comes. It's not the one who makes mistakes that lose. It's the one who don't know how to stop, who can't not enter and who can't accept the pause, who just can't admit that today just isn't the day. That's exactly what I talk about a lot of my Telegram channel. Not where to buy or where to sell, but why we make these decisions we make it in the first place. There's educations there, trade breakdowns, my personal view of the market without rushing, without shouting, and without promises of fast money. There are no signals to get rich button, no illusion that trading is easy, but there's an honest conversation about risk, mindset, mistakes, and the path that everyone who stays in the market long term actually goes through. So if you like not just the trade, but to understand what you're doing and why that exactly the place where you can figure it out is basically calm. That's what I would say.
If you had to reduce everything to one thing, what is trading really about?
Okay, talking about like honestly, first and foremost, being yourself honest about this. The market doesn't require you to be smart, fast, or special. It requires you to be calm and consistent. So to like want to decide in advance and not to do what feel like doing is the most important thing. Trading isn't about wins or losses. It's about the long run, about staying in the game even when nothing is happening. So about being able to accept a loss without inner dialogue and a profit without like euphoria. So over time, you stop looking for a perfect entrance. You stop waiting for a confirmation. You simply observe, understand, and context, either act or don't. And both options become equally acceptable. At some point, the market stops being a source of stress. It becomes a background, a place where you are not trying to be like prove anything. You are just working, where what matters isn't a single trade or a single day, but who you remain over the long term. And if in the end you have become calmer or more patient or more honest with yourself, then trading has already done its most important job. So everything else will catch up in time.
Thank you, Manish. That was really great. And thank you for sharing this all the information in detail.
No problem. I'm glad that I'm able to help people, and I believe that people will grow and understand how this is important. And I hope they will connect with me through the link on the descriptions and they will catch up with me. More information obviously have been given there. So nice to meet you too, and
Thank
have
you,
a
Manish.
lovely
Have
day.
a great day.
You too.